All right. Good afternoon, everybody. I'm so used to saying good morning. What's going on?
Good afternoon. Good afternoon. Transition this to live. I have no clue. Right now it's on practice mode.
Oh, really?
Yeah. I can't
Did
just
you
go.
put like the caption and stuff already?
How's everyone doing? Anyone take any trades today?
Anyone taking a trade today? Nothing for me.
Yeah, nothing for me either. I mean, that makes sense.
Just clean up my charts a little bit.
Small W on NQ. How y'all do? We just sat out on today. There was no it wasn't clean to us. There was no setup tip for us. So, and tomorrow's a bank holiday as well. So we just kept that in mind. Playing a little we only take high conviction setups. So
Nothing.
no trades, no trade.
Today.
Yeah. Hey Sue, how's it going?
Something's really bothering me, and the camera's not centered. So
Yeah, no worries. So this is our first live stream, so keep in mind there might be some very minor technical difficulties here and there, but we will try to work through it, and we appreciate your patience.
got in on the IOFED to London low. Nice. That's a good short, brother. For me personally, I wasn't interested just because tomorrow is Veterans Day, bank holiday, and also after last week's large expansion lower, right? We dumped like 1,600 points. So off of that, I just want to see some more structure form. However, right now it's like, actually I can just transition.
Yeah, sure.
So like pretty much right now what I'm paying attention is just market structure shift, right? From the daily range low. And ideally, I would like to see let me just do all these annotations again. I don't know what happened to all my annotations. But ideally, I'd like to see this gap get revisited. That's pretty much my idea as of right now. See what we get into Wednesday. At least some nice structure. Trade off of on the 90-minute chart. Really what I'm looking for is just like a retracement. Preferably into this new golden gap. Higher into all these equal highs. Boom. Something like that. Something like that.
I think we need our ring light to be a bit brighter.
Yeah, I think we should bring it closer is what we need to do, but we can't really do that. So this is how it's gonna be for now.
Yeah. I mean, we can technically do that.
Okay.
You want to bring it to like here, maybe? Yeah, in this pool. All right. YM has fully closed in the 1 hour gap. Let me check. Who says YM has fully closed in the 1 hour gap? Let's check it out, Sue. Oh, you talking about the close through that NWOG? Yeah, it has. And NQ and ES has not yet.
Oh.
How's that look?
Right.
You move like, yeah, it doesn't have to be as bright, but you move it more in front of us. Yeah. No, it doesn't get free. But you see a shadow, which is pretty interesting. Yeah. Let me know how it is, guys. We'd love feedback as well. Yeah, just look at the charts.
We're now illuminated.
Yeah, that's true, Sue. We just don't have a setup, so it is what it is.
Yeah.
We just let it be.
We put this setup together. We're talking about like the market setup.
Yeah.
Oh, okay. I was gonna say this studio we literally put it together like within the hour. We'll definitely be improving. We're gonna be buying some furniture and stuff, so it's nicer. But
Yeah, it's a fresh new place, so we're trying to figure some things out. A lot of cords everywhere. How it is.
That's how it is. Looks fine to me. Nice. That's good to know.
It's cool. It's cool.
Yeah, but today. Let me change. Okay, just looking at price, like it looks good, but again, it's just like the element of time, right? Where it's like we have a bank holiday tomorrow. Last week we expanded the downside by like 1,400 points, 1,600 points, and I rather just let price action develop itself here. We do have a London low SMT though. Yes, we do. Great. London low SMT aligned with the bias. But again, just waiting for that 90-minute structure to kind of form out. I would like to see a revisitation of this gap, ideally. But, you know, historically, whenever I want this gap to be filled, it's like later into the week. So you have the new week opening gap. Monday tends to trade higher. Tuesday might tend to trade higher. And then we finally get a revisitation. Kind of like last week as well.
Yeah. Especially since we
Yeah.
went up from the NWALK so far, like almost 300 points.
Yeah.
What's up, Minesh? What's good? What's good? Suicide looks good. Yeah.
Yo, what's up?
Also, keep in mind it's 12 too. We're almost through the day.
No, well, I mean, we still got like 5 hours.
Yeah, but you know, volume's a bit less. What's good, Slim? Orca asks, do you guys utilize Asia for SMT or only London? You want to start now, or you want me to take?
You got it.
All right. We do use it to recognize like what happened overnight, which may affect what we do in the morning. But we always prioritize the most recent sequential time-based SMT. Oh, Sue said, I'm sorry for confusing. I meant your studio setup. Let's go. God like it. Let's go. Let's go.
Okay, so for anyone, like, do you guys prefer having our chart on the screen, or you guys want our full cam? Like, what's the preference here?
Yeah, we can really do. I mean,
We can swap between, but it's just like,
yeah.
Which one should we default to? Maybe size your cam up a bit. Okay, I think we'll just default to the cam only for now.
Yeah, I think when we're doing like
Yeah,
questions,
yeah,
unless we need to pull up the chart.
Yeah, we'll pull up the chart if we need to answer anything, but until then, we'll just have the cam on. They're so weird being on camera. I'm so used to just being behind the microphone.
No camera.
Yeah. For the short this morning, it was the nasty of the nasty DXY. That's one of them. Yeah, using a lot of confluences. What happened to a dollar?
I'll pull up the chart. You're showing the dollar.
I don't know. I'm just taking a look.
Okay. Can you explain what you mean? Excuse me. SMT being confirmed. Okay, I can answer this one. You can build on it if you want. What confirms an SMT is candle closure, generally, or actually displacement after is better. But if our highest conviction is body closure. But then once we have body closure, if we have displacement with the SMT as well, either doing a true market structure shift or changing state delivery, that is what would confirm it.
You gotta look at the camera.
Oh,
you're talking to
right. Guys, we're practicing. Yeah. Re-explain it. Basically, the best way is with displacement, creating a either true market structure shift or change of state delivery. But usually they both kind of happen together. So
yeah. So ideally, for me, the best confirmation of a SMT is like, let's say you get your SMT and then price creates change state delivery after that. That's like the best confirmation for me. The way I teach it to a lot of my students is pretty much wait for all three assets to create change state delivery, and that's usually super high conviction. But number one thing is always narrative. Number one. Like, if you don't have narrative, forget it. Don't even use SMT, bro.
Sir, narrative, SMT, order flow, risk management, pretty much the keys.
Yeah, it is the
Keys to success.
I use Zusi's indicator to track all the SMTs. I would, but what I found with indicators with SMT is that they pretty much create this cognitive bias. And the way I trade, I don't just purely use SMTs, right? I also use narrative building. So just purely using indicator, it created a lot of cognitive bias where it's like, I'm bullish, let's say. But then I just see a bearish SMT out of nowhere, then I'll just flip bias. So that was the problem for me with indicators. I know it helps some people. It helped me not miss any SMT at all, but narrative is always key, and then that's where I look for SMT after that.
I think another issue I found was that it just creates a lot of noise.
Yeah.
Especially depends on how it's designed,
Yeah.
but it doesn't really help you filter out like higher probability SMTs. Especially, it might like mess with you if it's like against your narrative, like as Ethan mentioned earlier, like you just flip, right?
Yeah.
So, it just creates a lot of noise, and sometimes like you want a clean slate when you're trading.
I agree.
Or actually, not sometimes, all the time you want a clean slate when you're
I
trading.
prefer just clean price action. That's why, like, the way I have my chart set up, like you'll see here, I just use the, day equality theory at the bottom of my chart. It just divides time into quarters for me, and I just look at the time ranges between them, and I just get used to like looking at SMT between the quarters or between the time ranges, if you want to say. And from there, that's kind of how I do it. Because otherwise, like if I have like the lines drawn out on the high and the low, it's like I just get cognitive bias a lot of the times. So I prefer to just have a naked chart, start my analysis from nothing but like a simple one chart with how's our market structure looking, and then from there build my narrative. What's the context of the market? What's the news events coming up? What's going on geopolitically? And then that's how I build my narrative, right? It's like what makes price high probability to go towards one side versus the other, and then from there I really just do SMT as a confirmation. So it's like within market structure, where does it make sense to actually look for SMT as the final confirmation for me? So that's kind of how I look at it.
We have some other questions. So Orca says, following his question of like, can you explain what you mean by SMT is confirmed? And then we answered that, and he says, so like a 6-hour candle closure for a weekly time-based SMT.
Yeah.
Well, yes, but with also displacement, and if it's following, like, let's say it's like overall, like the narrative is very bullish,
Yeah.
and we have a low retracement, and then you have a 6-hour, like weekly time-based SMT with a change of state delivery higher, that is super high conviction to continue higher.
So if I were to show you like a high, like the most A+ setup, in my opinion, is just if you have a higher time frame. Let's say you're looking at this dealing range right here on a higher time frame, and you have a fair value gap, right? And prices traded into a fair value gap. I'm gonna change the color of this so then it's easier for you to. So the purple line is the intermediate term time frame. Black line is the higher time frame. But pretty much what I'm looking for is like within a higher time frame fair value gap. I'm just simply looking for an SMT within it on a lower time frame. So either 1 or 2 time frames below. I wouldn't go anything beyond that. No, sorry, you're good. And then let's say you have an SMT down here, and really what I'm looking for during this SMT is if we zoom in, once this SMT is formed, all I'm looking for is, let's say there's a down close candle right here. I'm actually going to do it this way. I'm going to draw the candle straight fully out. So let's say you have a candle closure below here. And then you get a nice little displacement candle to the upside, creating that change in state delivery. What did I just do? Creating that change in state delivery. Bang. Right? Takes engulfs these down close candles, which is essentially creating that change state delivery, because we also get a liquidity sweep here. On top of that, it's also SMT. So the most important key here is SMT, and then you get this displacement candle up. This is the highest conviction when you see a big candle after this engulfing all of the down close candles. And once you have that change state delivery, that's pretty much how I take my trade. So I'll enter off of that, and then I'm going to be targeting buy side liquidity rate. So that's pretty much my trade, like how I do all my trading.
Jensen asks, what average risk per trade would you guys be using on a 50K challenge with 1.5K max drawdown? We tend to do just having 10 trades, like 10 losses in a row. And that's how we position our risk. Most of the challenges we do have a 2K max drawdown, so we would be risking $200 per trade, whether it's eval or funded.
Yeah, so really it just comes down to like what I don't think risk is something that is you can necessarily define. Just like I can't just tell you like how much to risk because it's very personal, right? Like risk appetite is very personal. So I would say like what fits your psychology because mathematically maybe something will fit your model, it'll optimize it to the best ability. But the question is, can you handle that? Because let's say you have a 95% win rate model and your risk parameters tell you to risk, I don't know, 33% of your account. So you can only take 3 losses in a row. Although highly unlikely that you're going to take 3 losses in a row, let's say you take 2 losses in a row. On that very last trade, do you think you're still going to be performing at your best mental state? Because the thing is, you only have one more trade until you blow your account, right? So if we put it into a sense like that, it's like, what can your psychology necessarily handle? And I think a really good spot for a lot of developing traders, like a really, really comfortable spot is whatever your max drawdown is, whatever your max loss limit is, you can go ahead and divide that by 20, and then that's your risk per trade. And that way you'll figure out like what fits your personality more. For me, I like to have 10 trades of drawdown. So it's like I'll divide. So let's say on my 50K account, I have $2,000 worth of max drawdown. So I'll divide that by 10, which gives you 200. So I risk $200 per trade, meaning even if I realize 10 trades, I need to realize 10 losing trades in a row in order to blow my account, right? So although highly unlikely that I'll realize 10 losing trades in a row, it's still a possibility. So I give myself that room. And that way it's like psychologically, I want to say I'm not just like scrambling to make back the
it's like, oh, I have to make this drawdown, I have to crawl out.
Yeah.
That's like the worst feeling.
Yeah, exactly. That's the worst feeling. Because like it's not out of the norm for me to see a 3 loss streak. So it's like, let's say I only give myself 5 losses in a row of room for drawdown. Like that does optimize my gains, but the thing is like after 3 losses in a row, how would I feel after that, right? So not necessarily something that I would want to incur on my mental state.
Yeah, I think that's definitely something that people don't always keep in mind. Like, yes, you can look at your statistics. You may have like more than 50% win rate, so then you can position your risk accordingly. But a lot of people don't take into account their emotional state when they are in drawdown because it is a different emotional state and you have to recognize that, right? So like, how can you make it so it's a risk that you can take and you can just continue trading another day, right?
Yeah. So what I would say as my recommendation is, now I will say $150 and below is quite little for a risk per trade, especially in futures. So I'd say a starting point is $150, given that your drawdown is 1.5K. I just start at $150. And if you're finding accounts that, let's say it's a 50K account and only gives you $1,000 drawdown, then unfortunately, because we are trading futures, you're going to have to risk something like $150, $200, which will reduce the amount of losses you can take in a row. But that is where I would start off, is risking a minimum of $150 per trade so you can actually size properly for your trades. And then from there is just either building a buffer or just accepting that you can face that mental drawdown. Not only mental drawdown, but also like, P&L drawdown. So.
Oh, we got a pretty great question by Space Bliss.
Yeah.
It is, how have you guys built up your discipline to not take unnecessary trades? Like a day like today or tomorrow? I don't mind going first, but you can go first.
For me, it's God.
Yeah, that's true.
It's God. But honestly, it's just like, I will say, okay, number one thing is definitely God. He gives me patience, gives me the discipline that I need. Because it's just like putting my trust in a higher power, is understanding God will provide for me and just trusting the process. Whether I take a loss today, He will still provide for me tomorrow, right? So I'm putting my trust and all of the control of my life into something higher power. So it helps me execute and follow the process better. But mainly, I think for a lot of people, like if we're let's say we were keeping religion out of this, what I would say is it's a lot of accumulated experiences within the market that actually builds you up. So I know a lot of people say like you need to find your edge in the market, but what actually is your edge is there's three aspects to trading. The main three aspects is technical analysis, there's psychology, and there's also risk management, right? So risk management really just comes down to like how bad do you want it? You're just gonna follow your rules, right? Like that's point blank simple. You break your risk management rules, you're asking to get liquidated essentially. So let's talk about the other two, psychology and technical edge. So this is where you're going to have two different edges. So technical edge is your strategy. You know your strategy is profitable. You're going to be going ahead and use that strategy. That's fine. But the other aspect of it is a lot of people say, "Oh, psychologically, sometimes I close my trades early. I won't let my edge play out." But that edge is also within your psychology. So you have to find the qualities that suit you best. Some people are maybe more impulsive than others. So maybe you want to trade the 1 minute chart so you're in and you're out and you can just cut it off. Be like, I'm done for today, closing the charts, I'm off. Other people, maybe their strength is their patience. So for me, I think my strength is more in my patience and my, I guess, logical thinking side of things. So when it comes to it, I like to execute on the 5 minute chart. Sometimes I'll be holding for 4 hours, 5 hours, 6 hours, maybe turning it into a swing trade. Whereas maybe a more impulsive trader won't be able to hold for that long, right? So you have to find your psychological edge too, and that lies in what your personal strengths are in your personality. And eventually, the more you get used to that, I think by accumulating experiences through the strengths that you have, that you recognize within yourself, through those experiences, you can translate it into different types of trading. For me, for example, it's like I understand that I have to hold my trade for 4 to 6 hours. I know how a price typically likes to develop. And because I've gotten so used to that, I could go down to a 1 minute chart and still not be that impulsive, right? So it's just translating your experiences and understanding that everything is just a different time frame. But once you start building up those experiences, that's where that true edge comes through.
Yeah, I think another thing that like Ethan kind of inferred to but didn't directly mention is honestly, like with religion, we're trying to look at the bigger picture, right? We're looking at eternity. But if you're not religious, let's say, like you're atheist, there's still a bigger picture to look at. There's always a bigger picture to look at, and that's your life, right?
Yeah.
And I think when we're so in our holes in trading, like just studying every day, you guys know how it is, like, back testing, spend all this time, and you build up this kind of skewed perception of money and percentages. And people are going for like, oh yeah, we should be averaging 3 to 5% a day. Like, yeah, you're obviously gonna be leveraging your whole account, like, but you have to look at it long term, right? Even if you're doing like 0.2%, 0.3% a day, that is pretty insane. Like per month, you're probably outperforming a lot of things. So you have to kind of have that perspective in mind. And we're not here to trade just temporarily. We're here for trying to run a marathon, right? We're trying to be here long term, trying to be more consistent, not have really high highs and low lows, but try to have a little more,
just
gradual climb up and scale up, build up capital. And that's the only way to go. Honestly,
I think,
that's the only way to go.
Yeah, to add on to that, it's like thinking about long term is about like, I know a lot of traders say this, but it's like making 1% on $100 might feel like nothing, but it builds up that habit, right? But imagine you're making 1% on $1 million, right? So just the long game is always the way to go when it comes to, in my opinion, when it comes to investing, trading, anything, the long game is the way to go. Not financial advice. I'm not a financial advisor, but that's from my experience. Is the slow and steady always wins a race. So it's not about like I'll give you guys like a ballpark number. Now, not to pocket watch us, but let's say on one account we make 150K account on month, we on average make, let's say, $2,000 to $3,000 per 50K account. But we're only risking $200 per trade. So instead of risking more on the next trade, let's say $400 risk per trade, wouldn't you rather buy another 50K account and then risk more risk that is allocated to you then, right? And you're scaling up. You're making the same amount in terms of percentages, but you're just scaling capital rather than your risk. Does that make sense?
Yeah.
So just think of that. You're making 3,000. Okay, more realistic. You're making $1,000 on a 50K account. Once you get that payout, you buy 4 more accounts. Now you have 5 accounts you're taking a payout $5,000 on, right?
Hmm.
And then after that, you double it again, maybe, because prop firms are such a great leverage tool, right? You go 10 accounts, you're making 10 grand a month. But it all starts from starting slow and focusing on the process and not falling into the pit trap or the pitfall
Yeah.
of over leveraging, over trading, because it really is just about taking those quality setups with a lot more capital
Exactly.
rather than taking a lot more setups with less capital or increasing risk because you've made profits on something.
That's pretty much the hack for
Yep.
prop firms.
Yep. That is the hack.
Yeah, that's the hack.
It's not even just like for prop firms, it's also for personal accounts.
And I think the biggest thing is another thing to add on to that is like a really big part of it is the psychological part. So when you're leveraging that much capital or like that much risk, you tend to be more emotional and more reactive in a way that you don't want to be. But if you're just trading, like it looks like one account to you, you're just risking $200. Yeah, it's just you just do what you normally do every day, but except it's copy traded to like 20 accounts, right?
Yeah.
So let's go on to the next question that we have a lot.
Yeah.
Tim Payne talking about he had a 1 hour AMD setup this morning, took a London low, bouncing on the top, massive gap. Nice. If you took the trade and it's part of your plan, I hope it worked out, man. That's really good. We like to use time-based SMTs because it helps us to identify like manipulation, distribution, and the switch between phases. Phase is the word?
Yeah, it's in phases. Also, I realized we didn't really answer Space Bliss's question.
Did we?
To be completely like the most.
How did we build
Yeah,
it?
yeah. How do like
We just kind
how
of
do we not take unnecessary trades and just understanding your model really well? So I guess it comes into like the answer part of it would be technical edge is knowing when your edge is not present is very important as well. So that's how you can filter out unnecessary trades.
Yeah.
Yeah.
But I think there's a problem where it's like you filter it out, but emotionally you still just take the trade, or you like make up
Yeah.
like confluences towards where you want like your cognitive biases towards. So that's why we also say it's very important psychologically to have a kind of grasp on the bigger picture. You know, to be here long term, it's okay if you lose your 2R max loss today, right? As long as you're not blowing your whole account, that's a part of the plan, right? You have that written down. You know you're going to take losses eventually, right? There's no 100% win rate model.
Yeah. Maybe some people have 100%, but not us. We don't have the 100%.
Yes, but we don't need the 100%, so it doesn't matter. How to build a narrative. So Manesh asked, how to build narrative in the market. Is it enough to just use drawn liquidity, higher time frame PD arrays, higher time frame SMT?
I think that question in itself, you are adding a lot, like too much complexity. Like the simple answer I will tell you is just market structure. Is the market trending higher? Is it trending lower? Is it going sideways? That's it. That's all you focus on. And if it's trending higher, you're looking for bullish setups. If it's trending lower, you're looking for bearish setups. If it's going sideways, you're sitting on your hands, right? So just keep it as simple as possible. That's something I see with like I think that's just ICT as a whole though. Like when you go into high time frame, you're like, oh, fair value gap breaker, order block, Reaper, suspension block, like any of that stuff, like it all falls within market structure. So if you don't have market structure, make sure you understand market structure first, because that is the absolute core of the market. Like if you go back to the beginning of time, market structure is there, right? To this day, market structure is still here. It helps you stay adaptable to market conditions. So it's really important to have market structure. And it's just, again, simply higher highs, higher lows, higher highs, higher lows, or lower highs, lower lows, lower highs, lower lows. And you're just identifying that within the market and using that as your guide through the market to ride the waves and to pick the correct areas of interest, I would say, with a high degree of probability.
Okay, so I'll go to the next question. Sue asked, do you consider positional trading with the same narrative?
If it aligns with my higher time frame narrative, then yes, I do. So let's give you an example. Let me switch the screen. So So let's do a quick replay here, just so that I can show you guys what I mean. So let's say on the daily chart, I'm looking for a pullback in market structure, right? And so where am I looking for a pullback into? My favorite areas of interest is going to be the fair value gap. So I'm going to be marking out the fair value gap. So I see that price went from this high, and I would like to see price pull back in terms of market structure because we're making higher highs, higher lows, higher highs, right? So we're bullish market structure. So I'm looking for continued higher prices. But because this is the daily chart, I'm interested to see this pullback act as a short opportunity for me, right? So what confirms this for me is looking for this retracement is if we drop down to the 90-minute chart or the hourly chart, whichever you prefer. Once we drop down, we can see that we get a market structure shift right here, right? Price closes below this swing low right here, creating that market structure shift. This is going to be my new dealing range on the intermediate term time frame. So on the intermediate term time frame, once I have this framework, I understand I'm looking for shorts from this high, again, into the daily fair value gap, which is over here, right? So when would I turn my intraday trades or my scalp trades into a longer term trade or a positional trade is when I have all the time frames aligned. So in this case, let's say I took a short. Let's say we traded into this bearish order block right here, right? And I took a short from here. So on an intraday basis, most likely you're closing your trade somewhere down here, right? But because I understand that the market, the intermediate term time frame and the higher time frame is in alignment, and I'm taking a trade in alignment of that bias as well, I will then, instead of closing my trade, what did I just do? Okay.
To restart.
Instead of taking my profit, like let's say at this low within the same day, I'll hold it until this target is met. And this is kind of like options. It's like leveraging options as well to like trade in the confluence of your analysis. But let's say instead of holding it for just a day, I hold it for an extra day or two. So then price can move towards the intended target and I realize a higher RR trade, right? So I turn an intraday entry or a scalp entry into a swing trade or a positional trade. So that's kind of how I go about it.
Yeah.
And as you go along, like for example, you got one trade here. Like let's say you entered this trade on Friday, October 31st, and then on Monday, November 3rd, you had another entry intraday. So this is where pyramid comes into play. So you could pyramid another position right here. And you can see how by simply adding to your position, you're pretty much doubling your RR, right? By holding to this target right here. Now, would I pyramid here per se? I wouldn't. And the reason is because this entry, like if there was another entry at this high, that doesn't allow me to de-risk my initial position, right? So unless I could move my initial position to break even to protect myself and not add more risk,
It's just more risk.
I would pyramid in. But because in this specific example, I can't do that, I wouldn't pyramid in for this one.
Jason said from earlier, sometimes NQ stop loss is 100 plus points, which pushes my single trade risk well above a more conservative average risk sizing. In those cases, Ethan and I just don't take the trade.
Don't take the trade.
Just don't take the trade.
Don't take the trade.
Unless you can position for it. But like you should either scale down, but if you're like the smallest you can be, like 1 micro on like ES or something, or just 1 micro on NQ, whatever you normally trade, and you can't go below that, then you just don't take the trade, right?
Yep. If you can't size for it, don't take the trade.
That's a part of risk management.
I think that's something a lot of people ask. They're like, oh, but I'm missing my setup. This is A+ setup. It doesn't matter. It's not an A+ setup if it doesn't fit your risk management rules. That is probably one of the most important things is risk management. Right? That's facts. So if you can't afford it, you can't afford it, and don't worry, you'll afford it in the future. But for now, just let it go.
Yeah,
and you have to be okay with that.
Tim says not trading tomorrow, very low probability. Same with us.
Yeah, tomorrow is
No
a
trades.
bank holiday, so I will not be trading.
What's good? Golden nugget. STF. Okay, Gamer Pro says, Ethan, how do you trail stop loss? Most of the time, I take profits too early.
So trailing stop losses, it honestly just comes down to market structure. Everything's market structure. I kid you not. Like if the market is trending in my favor, I'm just gonna trail that trend, right? I'm not fading the trend until it tells me to fade it. So if we're just getting higher highs, higher lows consistently, let's say we get a candle closure above here, get a candle closure above here, get a candle closure above here. Every time there's a candle closure, I'm just trailing my stop loss to this swing low, right? We get another candle closure up here, trailing my stop loss to the swing low, another candle closure up here. And then once we get another candle closure above the swing point, I'm trailing my stop loss to the swing low. So if the market's just making higher highs and higher lows, I'm gonna continue following it, right? Until I have, obviously I hit a target, but this is how I trail my stop loss. And the benefit of this is once we get a closure below this low, a lot of the times when I get stopped out, the market absolutely reverses on me. And this is how this is how you know your analysis is good, because when you're exiting the market, it's potentially someone else's entry. So that's something that you can keep in mind. So let me show you something from this morning. This morning on live stream, right? I was basically annotating to the team that we initially had a position here. I didn't take a trade, but I was just annotating for the team. So we had a position. This was like the FCR trade. So once we had a break above this high, gotta find this. Yeah, so right here, this fair value gap. So the entry was here, stop loss was below this low. So how I was annotating how to trail the stop loss this morning was essentially every time we get a break of structure. So over here, you see this break of structure right here.
Closure above.
With a closure above. So it's very important you have closure above. So this high was the highest high from this leg right here, right? And so once we close above that, I'm looking at the lowest low within this leg. And then we get a closure above here. So I can trail my stop loss to this low. That should be the protected low. And so trailing stop loss here. Right. And so what I'm waiting for after this is now the new high that is established essentially. So I'm waiting for a closure above this high. So I don't trail my stop loss until we get a closure above this high. So you see this high gets wicked out and then we come back down to take this low out. If you prematurely trail your stop loss up to this low, you would have been stopped out, which is why it's super important to wait for candle closure. And so once we have this candle closure at 1025, that's where I trail my stop loss up to this low right here, right? And this should be the protected low. So at this point, you're pretty much sitting at break even, maybe minus 0.05 R. And look what happens when price comes back down. Once we get a closure beyond the trailing stop loss, it just dumps off, right? So you need to be in alignment of market structure. It's just mandatory.
Exactly.
So, and then here, I guess it just sold off. I don't know what happened this morning. I wasn't paying attention, but it just sold off after that. But that happens a lot. And that's why I think market structure is so powerful, because the second it's invalidated, you're going the other way, most likely.
Yeah. Or get asked when a 5-minute setup presents at 9:05, the valid SMT, time-based SMT. How do you approach that knowing you enter at 9:30? So like we're knowing that we're entering near 9:30. I'm assuming you're asking. When do you know not to enter? I can go first on this one. So we tend to take trades after the first volatility injection. So if we have a volatility injection at 8:30 and the setup presents itself, then we would consider it and maybe take it. Though it also depends on, like, let's say we had an overnight expansion, for example, then potentially we would maybe half risk or just not take it and let it play out, right? We're okay with missing trades as well. It's not a problem. But if there is no volatility injection earlier, we tend to just let 9:30 play out.
I think in our trading journey, it's just come to the point where it's like, I don't care if a trade goes without me or not. I rather a trade go without me because there's no stress involved. Like the second we're risk on, there's stress. But if we're risk off, we're just chilling, right? We're just waiting for that opportunity to come to us. When it's something where like, oh, framework's in place, confirmation's in place, just like everything's in place, that's the setup we take. That's the setup that we show you guys, right? Not that we're taking any positions outside of that, but
Yeah.
that's what we're waiting for. And it's just like understanding that, like, I don't know how to say this more than just saying less is more. Like, less is more. And you really have to experience it to understand it, I would say.
Let's see.
Look what you released. This is
me.
Elijah.
Yes, I'm Elijah. I'm a new. I'm not gonna use that term, but I'm Ethan's friend. We work together.
We work
so,
together.
Yes. Yes.
He's the guy behind all the scenes. So he's just starting to show his face now.
The bodies tell the story and the wicks do the damage. Yes, sir.
I thought you guys were the same person.
Maybe we are.
Hey, maybe we are.
I'm AI. Maybe he's AI. Look,
Maybe
ready? I'm gonna slap him right. Okay. You'll see that he's AI.
If price fills a gap on one index but not the others, what do you expect to happen? Do you expect the gaps to get filled on all indices or just watch to see how price reacts? It depends. If you get an SMT fill, I only deem it as valid if there is a lower time frame time-based liquidity SMT. Other than that, I don't really use SMT fill, I'll be honest.
Yeah. I used to, and I think it just complicated things for me. I just keep it simple. Like, just because one market goes there doesn't mean all markets have to go there, especially like intraday. So keep that in mind and react to the market accordingly. Coming out the shell, are we? Yeah. Surprise, guys.
Okay. Alright, bro.
No, that's what Lee said.
Yeah. Would you guys consider closing the if correlate asset?
We actually have an example of this.
Yeah,
Our
like
trade.
yesterday.
Yeah.
Whenever one market hits a draw on liquidity first, I feel like I can just say it, Loki. I don't really show it. Whenever you have a target, and basically how I do it for the trade management is if one market hits the draw on liquidity first, I'll move stops to break even. That's pretty much it.
Yeah.
And if there's an opposing model against me, then I'll probably exit early. But for the most part, if I'm already trailed into profit, I'll just continue with the original narrative that I had in mind.
Yeah, just keep trailing.
Yeah.
And if there is no trail and as you said, the draw gets
Yeah.
hit, then you break even.
Yeah. But yeah, I think when there's an opposing model, it'll tell me to either like protect myself or to just close out. It really depends on the higher time frame narrative though. So there could be an opposing model, but let's say you're bullish initially and then you get a bearish model and it's in alignment of your narrative as well, then that's why I'll close early, pretty much.
Yeah. And thanks for everything, guys. No problem, man. I really hope it helps and something you grab something from this. Yeah, ask more questions. Hope something resonates. I wish I asked more questions when I started off. I was a little arrogant and had a little bit of ego after winning a couple paper trades and kind of went ghost mode and then lost a bunch of money. But that's sometimes how it goes. So
I mean, for you it's a little different because you hit like a massive payout within like.
Okay, we're gonna talk about that. Yeah, and that honestly hurt my trading more than it helped my trading, to be honest. But yeah, I think it was within my first year and a half. I think year and a half. Yeah, it was more damaging than beneficial. But hey, man, it is what it is. I think long term was more damaging.
Yeah, long term.
During that time, it was super lit, but other than that, like long term, yeah, definitely for my trading, not great.
All right. What else we got?
One.
So was that your question though about the positional trading? Making sure.
Make sure we. Also, don't be afraid to ask the same question again or like to re-elaborate on it because sometimes we miss it or sometimes we don't directly answer it. So if you guys, just let us know.
Awesome. You ever have situations when price runs too much prior to entry or not really?
Oh, 100%.
Yeah,
100%.
100%. Let's say it's 925 and price just sends it. Then at 930 we're just like, all right, I guess we got nothing to do.
Yeah.
But that's just how it is. Sometimes just like guess I got nothing to do.
Yeah.
And you have to be okay with that. Go do something else. And I think one big thing for me, actually, now you guys help me realize this, I guess, right now. But one big thing is like having something above trading. It's like if trading is your top thing on your priority list, you're gonna be itching to trade. But if you have something else, like for me, for example, it's like God above all, right? And that helps me regulate my emotions, helps me regulate my actions. And then number two is like, oh, I enjoy making content for, the educational content, or it could be just for the community.
Yeah, for e-trades.
Right.
Yeah.
I put that second, like, and then there's also family that's in the second place, right? So there's a lot of things I'm looking forward to. It's like if there's no trade today, great. I get to take the day off, and maybe I'll go eat lunch with Elijah. Maybe I'll go eat lunch with my girlfriend, right? But that's like the main thing is just having things above trading as a priority, because trading is it's such a waiting game. That's all it is, right? You're just waiting for the opportunity to present itself, and the more you stare at a chart, the more you try to add more things to your trading to make it complex, the more opportunity you're giving yourself to force setups or force trades, and you're just opening up that window for disaster. So I would say having something above trading itself is super important. Like you could even prioritize your own health over it. Like if I have no trade today, great. I get to go to the gym earlier today. For example, I'm gonna go for a run. I'm gonna read maybe at the beach. Like these are activities that would be much more productive than just staring at a chart. Even though staring at a chart feels like you're being productive, you're doing work, but it's really not.
It's really not.
It should take you like no more than 10 minutes to understand whether you should trade or not. If you're there 10 minutes, more than 10 minutes, you're like, I just want to see what's going to happen today. I think price is going to do this. Like when you're second guessing yourself like that, get away from the chart.
Yeah, you're risky.
You're done. Like, just get away. Go enjoy your day.
Yeah. I do want to add something to that. It's like a really basic exercise you can do. It sounds like stupid. It sounds like something you do in like middle school, for example, but like genuinely like write down your values, right? Like if trading money is your top, then you're going to have your identity fully in it. And whenever you take a loss, whenever you have a lose streak, it's going to hit you personally, right?
Yeah, that's good.
And for us, our identity is not in that, right? It's in God. It's in our values. It's in our morals, right? So we know even if we take a loss, it's not, oh, we suck. It's not because it's not like a personal attack on us, right? It's just the statistics. It just happens and you just go on to the next, and you're confident you're going to win because you have backtested your model. You know your win rate. You know the average return, right? So it's not a problem when you zoom out like that. So it's just something I recommend. Is like if you have a written journal or typed up journal, just put out your values, right? And be honest with yourself. It's okay to have money at your top, but not for like you can't. It's not sustainable, right? You might want to look into what really fulfills you, right? Money's not going to fulfill you, right? It's surprisingly dark at the top. So, oh, that's kind of a bar.
That was a bar. That's a clip.
But yes, it's surprisingly dark at the top.
It is a clip right there. Yeah. His advice was much better than mine. I can't lie.
There's no better. I think both are good. Just combine both. Very good. There's no such thing as better. Let's see. What else? Do you ever have situations when price? Oh, no, we answered that. Took these longs in NQ from London low, just applied your trailing stop loss concept on the 5-minute chart.
Nice.
Right, nice. Good job.
Good
Something I will add to that though, if you we trail market structure according to the time frame we entered on.
Yeah.
So if you entered on the 15-minute, I recommend trailing with the 15-minute market structure. So 15-minute closing above these highs you see at the most recent wicks. If you entered on a 5-minute, off a 5-minute change of state delivery or 5-minute time-based SMT, then that's a different story. And then that's good trail.
Do you have a list of targets that you wouldn't like to be hit prior to entry? No.
Not really.
No, not really. No. It's just if my narrative is still intact, like the only thing is just if let's say my target's previous day high on a trade and previous day high is already hit, then I'd be like, okay, there's no trade opportunity. But if it's still intact and narrative's still there, then I'll still take the trade. There's no set list of things that I'm looking to be hit or not hit. I'll still take the trade as long as narrative's at play.
All right, cool. We'll wait a bit around for a couple more questions. But if there's nothing, then we can maybe close up at like 1.
Yeah. Gonna
Yeah.
eat lunch, bro.
Nothing? Yeah, we'll close up at 1. But yeah, give us some questions. If you guys don't have any more questions, that's okay. We'll definitely be doing this again. I hope you guys enjoyed it. If you look at EU and GU, it's playing out how you taught. Wanna take a
I
look
haven't
at it?
talked about EUG in a while, but let's take a look.
Let's take a look.
Analysis is one thing, execution is another. I'll be honest.
Yeah.
But yeah,
Mm,
looks good. ERL to IRL.
Euro,
Run it.
Euro. All right. Oh, this is actually pretty fun.
Yeah, this is pretty fun.
Yeah, we should do this more. I hope you guys enjoyed it. Hope you guys enjoyed it as much as we did.
Yeah, you guys should definitely talk about like more things. It doesn't have to be trading related either. You can ask about our faith and stuff like that too, or just like our daily lives. What do we do every day?
Yeah.
Stuff like that.
Quite simple creatures, I'd say, but
Yeah.
you never know.
Hey, but you can never know till you ask.
I wonder if is anyone watching like an athlete, like a top like professional athlete? That's kind of cool.
What?
Not gonna lie.
What do you mean?
I'm just wondering if people like part of chat are like athletes.
Oh,
Yeah, like asking about like
I see
what they're
what
doing
you
outside of like the charts.
mean.
I'm definitely not an athlete. I'll tell you that. I'm probably the furthest thing. I like weightlifting and swimming, but I wouldn't call myself an athlete. I like eating too much. Maybe I think that's probably it.
I enjoy exercise, but I don't do it. Actually, I mean,
Well, we've been doing
yeah,
it. Yeah.
Alright, is it possible to run through a SMT trade from beginning to end with the higher time frame to lower time frame and execution?
Don't go through that, or we can defer them to material. We got like trade recaps.
Yeah, we got
Yeah,
trade
you-
recaps.
Yeah.
I just look.
Yeah. It's all good. It's all good. It's a little bit a lot right now. We want to keep it to yeah, it'd be a lot to show right now.
Yeah,
but we do have
we'll save it for the trade recaps.
yes on our Discord. I think it's in the link in the bio, I believe. Right,
Yep,
you put it
link
there.
in the bio.
Yeah, so we have trade recaps. We literally record every single trade recap of the trade we take. We also call out the trade we take like pretty much live, or actually live like, seconds
Alright,
after.
I'll do one example.
Okay, he'll do one example. But we have trade recaps that pretty much every single time we have higher time frame, lower time frame. We analyze that. It's alignment with our pre-market, and then it just like that's pretty much how it goes. It's pretty quite simple.
So on the daily chart.
All right, we got you. We got you. Ethan's gonna pull through.
Okay, I'm gonna pull through. I've done this many times today. All right, so on the daily chart, essentially, I'm using replay mode, but this is a trade that we caught in live time and we called it. So I'm gonna use the example. So here, pretty much the narrative here is like we have this bullish range, right, on the daily chart. So given that price has already retraced back into this fair value gap and also this support zone, or you could call it your unicorn, or you can call it whatever you want to call it. Any bullish array you can call it. So in this case, I'm just paying attention to the fair value gap and this order block a little bit. But you can see price trades into internal range liquidity. So my framework tells me to look for external range liquidity after that, right? So ideally, what I wanted to see was these all-time highs being hit again. So once price traded into here, I drop down to the 90-minute chart, and I'm looking for SMT. So here you can see that Nasdaq closes below previous day low. Let me just annotate that. Closes below previous day low. ES closes below previous day low. And then YM fails to close below previous day low. Right? So that is a bullish SMT. So with this SMT, what that does is I'm using it as a confirmation tool. So again, my narrative begins on Nasdaq, right? And I have this bullish idea, but what confirms my narrative for me is SMT. So here we have this bullish previous day low SMT, right? And so simply to get in on this trade, now I'm looking for a bullish lower time frame SMT as my confirmation with a change in state delivery. So we drop down to the 15-minute chart. We're going to be looking for on the 15-minute chart is a London low SMT, which here you do have an SMT. It's very small, but it's between the bodies. So this candle closure down is the low of London low candle body. We get an opening below it. If we look at ES here, you never get that opening below London low. So there's a cracking correlation here, and that is pretty much Nasdaq opens lower, ES fails to open lower, right? So that's the cracking correlation we're looking at. And additionally, the main confluence we're looking for on the lower time frame is a blatant SMT. And so here at 9:30, we always wait for the first volatility injection first. And so at 9:30, we see that we have this 5-minute SMT formed on the low, right? So this would be below this SMT right here.
And change in state delivery.
And so you can see that Nasdaq takes out that low, ES fails to take it out, YM fails to take it out. And so once we get this engulfing candle right here, why is this important? Is because within this SMT right here, where is the lowest down close candle that create the manipulation? This down close candle, right? So we get an engulfing candle. That is the change in state delivery that we're looking for. And so we just enter off of that candle closure at 9:35. Stop loss below the swing low here, expecting this to become the new protected low of market structure, right? So once we get a closure above this, we have confirmed that this low right here is now the protected low. And so how I trail my stop loss is essentially just following market structure. So over here, I'm gonna zoom in because we already know how we got the entry. So once we have a candle closure above this swing high, right? This low is responsible for creating this closure above this high, right? So I'm going to trail my stop loss to this low right here. Where do we get the next break of structure? Looking at this swing high right here, candle closes above here again. So this low is what sends price above here, closing above this high. So I'm going to be trailing my stop loss below this low. So we continue, we look for another break of structure. So we have another swing high right here, right? And then we have a low. So this low is what sent price higher, closing above this high. So I'm going to be trailing my stop loss to this low right here, right? And so again, next swing high right here gets formed and we get a closure above on this candle right here. This low right here is the one that sent price higher, closing above this high, creating the breaker structure. I'm going to trail my stop loss to that swing low. Next stop, we have another swing high right here, gets closed above over here. Not this wick, but this candle closure, right? And so what was the low that sent us there? So this low sends price above here, closing above that, creating a break of structure. And so I trail my stop loss to this low right here. And then next up, we have another swing high right here, which never got a candle closure above, which is why my trailing stop loss was over here for the entirety. And this is where I got stopped out on my trade for a nice 3.79R trade. And again, why this is so powerful, because once we get stopped out, what happens in price? It starts pushing lower, right? And that's why it's so important to be aware of what market structure is trying to do. All right, that is my presentation.
Astro Chimp said, burpees, then started the months ago, change it. Yeah, exercise. Yeah. Something we do often say is how your life outside the charts translates to the charts, right? So you want to build good habits, practice patience, and just like work on yourself outside the charts, right? And it'll just reflect onto the charts, right? Look good, feel good, kind of thing. Thanks for sharing your knowledge and time. Could you briefly describe your model?
Yes. Yes, I can.
Yes.
Our model is higher time frame market structure
Yes.
aligning with intermediate term time frame structure, and we're using SMTs. Yeah.
I think you just say it. Deal with
Higher
it.
time frame structure,
Okay, we're getting you a whole presentation, guys.
IRL, ERL. Okay. ITF structure, IRL, ERL. Okay, so this is going to be framework. All right.
He's cooking. He's cooking.
This next thing is going to be confirmation of framework. And that's 1 or 2 time frames. Boom, okay? So this is the step-by-step framework, then confirmation of framework, then we look for entry logic, which is SMT plus chain state delivery.
Yep. You spoke about that quite a bit. Feel free to look back on the recording or on the stream as well.
And then after this is management, trade management.
And if you guys didn't see, if you guys just joined in, even did a whole example of how he or how we would manage a trade.
Move to BE if one asset.
It's drawn the 30 in a deal.
First. Close if opposing. Fits a new narrative. Boom. And then watch this.
He's cooking. He's cooking.
Boom. And it goes back.
Wow. You guys better start taking screenshots.
Bang. If it fits a new narrative, then you're going back to the framework and you're going through every step of this process. And I will have to give credit to AM Trades because this is freaking amazing. This isn't his model, but the way I built my model is off of his framework for a framework, essentially. So,
Astro Trim says, why 90-minute chart, not hourly or 4 hour?
because it fits time-based liquidity. Boom.
One session is 6 hours, divide that by 4.
90 minutes. And that's
90
what it is,
minutes.
90. But I still look at the 1 hour sometimes, just for the hourly candle opens. But just for my backtesting, the 90-minute chart has been a lot more fruitful.
Yeah.
It's been nice. Nice with it.
Yeah, it totally makes sense if you use
Yeah.
quarterly theory or time-based liquidity. Why do you use NQ as main narrative building opposed to ES or YM? I mean,
You can use
simply-
either.
yeah, you can use either, but simply put, like, we trade NQ, so it kind of makes the most sense to look at NQ market structure, right?
Yep.
Awesome, thank you. So it's not always do or die 2R or 3R, etc. Yep, pretty much. And with this trailing, we tend to see. I mean, let me see. I can pull up my stats right now. Like an average of like probably like 3 to 5R, but then occasionally you'll have pretty big days because of that trailing, right? So you're following the trend, and as once all the time frames align and you're trading with the trend, we tend to get like, I don't know, pretty big days. Like
Yeah,
you
we got
get like 10 plus R days, 8,
9R day, like, last
8R, 9R. Like, I mean, it's just whatever the market really gives us, right? At the end of the day,
exactly.
like sometimes we have a 0.2R because we were told to trail, and then the trail gets stopped out, right? It's just how it is sometimes, but that's why the system, Ethan developed the system, right?
So I can show you guys. I'll let me pull it up.
What you said about moving the stops to the BOS highs and lows really helped me.
Actually, I don't want to pull it up.
It's all good. I've always knew about it, but I understood it just now. Awesome. Will this be recorded? I believe so.
I believe so. It'll be on my YouTube channel.
So many R's. Sound like a pirate.
Arr.
Awesome.
Yeah, we've just been on a good streak, but again, it's just staying true to the process, right? We have losing streaks. Recently, we've been on a winning streak. Like when we first started our community, literally we went on a 3-loss streak, and Elijah and I, like low key behind the scenes, were like, bro,
This
like,
is tough.
what's happening?
Just started this community, like, bro.
Yeah, and then now what are we? We're like a 5-win streak or something. I don't
Yeah,
know.
something along with that.
Crazy. 1, 2, 3, 4, 5. Yeah, we're on a 5-win streak now.
Yeah.
And these are like the wins. That's why it's so important to stay true to the process, because like the wins greatly outweigh the losses.
Biggest loss streak tends to be about 3 days,
Yeah.
3 trading days.
What's our biggest loss? Oh yeah. I think on average, like it's not out of the norm to see a 3-loss streak. I think the biggest I've experienced so far, I remember there was a time I was on a loss streak for like 2 weeks straight. But like in terms of like recently, I guess like the past couple months or so, the largest loss streak I've experienced is like a 4-loss streak.
Do you trade your own capital in the same way? Yes.
Yes, exactly the same way.
Exactly the same way. Yeah.
It's just what works for us. We're not changing it up. I know some people like dynamic risk and stuff like that, but it's not for me.
We don't want to change up what already works, right?
Yeah, exactly. Maybe like one day I'll grow into it, but for now it's kind of like it's just working. It's consistent. I'm gonna keep doing what I'm doing. It's just good losses. It's not necessary. Like sometimes the strategy, like statistically, like you'll just go through some loss streaks, but that's where your discretionary context building skill comes in, because by having that ability to be discretionary, it allows you to filter out some trades you want to take versus others. So that's also really important. But for the most part, everything is like 80% objective for us.
All right. I think we will
Close out here.
yeah, close out here. We'll give you guys an extra 2 minutes at one time. And if you guys have anything else, spit it out real quick. If not, you can always ask us questions on our Discord. Our Discords are public, or so
Again, link is in the description down below. You guys can join for free. And yeah, we post all of our positions there. We post all our analysis, anything there. And again, just to say it, like the new channel is E-Trades Community.
yeah, the new channel is E-Trades Community. We will eventually shift over to there. But right now, I know a lot of you guys are coming from Ethan's side and know Ethan fairly well. So, give you guys a little familiar face and a new one as well.
Yep. We're gonna start transitioning over. We're gonna do like dual stream most likely, so both channels are live at the same time, so you guys can subscribe to the other while you're watching one channel versus the other.
Yeah.
And then eventually we're gonna transition.
We will
over.
migrate. Yes, we will migrate. Once the next Q&A, this was very helpful. We don't have one set in stone, but if you follow our TikTok, Instagram, pretty much anything, like follow anything of ours, then you will get a notification of when we're going live next. We have events in our Discord as well, so you'll just see it plainly everywhere if you just keep your notifications on. So yeah, just keep an eye out. I don't think we'll ever actually, I don't want to say ever, but for now we just don't have a set date, so we'll just for like a next Q&A or like a set live stream, right?
Just like make sure you're in the Discord. You'll be notified if we go live. I think Discord is the best place to be because like announcements, everyone can see announcements there. So if we're going live for Q&A, we're in live for live trading, whatever, like you're gonna be notified there. Yeah,
that is our main platform. We are trying to build our TikTok and Instagram and stuff up, but our main platform is Discord. So.
Yeah, it's
just the easiest. Yeah. All right. Well, I guess that's it for every day. Oh, for today. For every day.
Thank you everyone for joining the live Q&A. I had a blast. I'm sure Elijah did too.
It's a great time.
It takes great questions to make a good Q&A. So thank you guys as well.
Yeah, thank you for bringing the questions. Bring the heat.
Yeah. I'll see you guys next time. Maybe we'll make this a weekly thing if you guys really enjoy it. We'll see.
We'll figure something out. Yeah, keep your eyes out on Discord, on any social media.
Yep. See you in ETC.
Yeah, see you there.
Awesome.
Take care.